Very well, welcome everyone. My name is Nicholas Tan from Kenanga Futures, Srinagar, Berhad. Thank you for spending your precious time to join our webinar today. It's a joint collaboration with CME Group in our effort to create awareness and provide education on listed derivatives to all the participants. We have returned with our nationwide campaign Into the Futures and stand a chance to win prizes worth up to 30,000 ringgit when you trade Malaysian, US, and Hong Kong futures contracts from 1st August until 31st October 2020. Please take note that futures and options trading involves substantial risk and due to leverage factor and may not be suitable for all investors. This webinar is purely for educational purposes. Kenanga Futures Sdn Bhd accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. Before we start, we would like to take this opportunity to invite you to Kenanga Futures' next webinar, which is on 27 August. It's about different trader, different trading plans. An invitation email will be sent to you. Don't miss out. Please remember to register once you receive the email. Next, if you have any question for our speaker, please feel free to post your questions through the Q&A box on the right side or on the bottom of your screen, and he will attend to your questions after the presentation. Today, we have Mr. Wong Gon Hao here, and he's going to share with us about market psychology, the winners and losers. So without further delay, I would like to kickstart our webinar today by welcoming our speaker, Mr. Wong Gon Hao. Gon Hao, over to you.
Right, I think before I start, I just want to test my mic. So Nicholas, do I sound all right?
Yes, very clear.
Okay, so I'll just start it off right now. So I think first of all, I want to thank you, Nicholas. So before I start, I just want to also thank your team members from Kenanga Futures for putting up all these together. So I also want to thank you to our sponsor, CME Group, Ms. Rachel Wong and Ms. Aiki Lau for sponsoring this webinar. And more importantly, all of you for tuning in. Now, so welcome to this webinar, Market Psychology, How Winners and Losers Think and Act. To help us to understand more about this subject, now we will first discuss about how the losers think and behave. Now we will discuss about that first. So once we have the knowledge about them, the objective is that so that we do not be like them. So that's my objective. Now then we will study into the winners thinking and behavior. Now because we want to think and behave like them. Okay, so the next slide, this is something about myself. And if you're interested to find out more about me, you can go to the link at the link below provided. Now, so apart from investing and trading my own personal fund, I function like a market detective. So studying into the market unusual activities and connecting the dots of the market complexity. So from the macro to the micro to even the nano level. So I study into the price behavioral action. Okay, so next slide will be disclaimer. Like what Nicholas explained earlier, the presentation made in this session is solely for educational purposes. It is not a recommendation, and investors acting on these views and strategies, you do it at your own risk. So these views and strategies do not represent those of the organizer or any of its affiliates. Right. So before we get into our discussion tonight, allow me to spend about just 5 minutes for honoring our sponsor, CME Group. Now, I just want to congratulate our sponsor for a very successful launch of their micro E-mini index futures since May last year. So it's more than a year about that. Now, from its growing volume, it has been growing month by month, quarter by quarter. So to me, it is a clear indication that this micro product, it is so much needed instrument, especially in times like this. So these are the volumes that we've seen. And I just want to highlight to you that just allow me to spend the next 5 minutes. All these are useful information if you are going to aspire to be a trader or you are already trader. Okay. Now, so all these micro E-mini futures, these are a very useful product. What I mean by that is that now every index that we trade, it carry a lot of worth. Now, what I mean by carry a lot of worth is that, for example, if you trade the Dow Jones micro E-mini futures, now when it is about 27,000 points, if you transact one lot, is as if you are buying or selling a basket of 30 stocks worth 13,500. So it's meaty. There's a lot of meat in it. You know, it's not nothing from thin air. So it's Nasdaq 100. It means that at 11,000 points right now, if you transact, it's as if you're buying a basket of stock, 100 stock, Nasdaq stock, tech stock worth $22,000 US dollars. Russell is the small cap index, 2,000 of them worth 7,500 US dollars. So it's S&P 500 companies worth 16,500. It literally worth 16,500. So I use it to hedge my own investment. I use it to trade when we have trading ideas, where I'll be sharing with you some trading methodology towards the end of this presentation as well. Okay, so you can see that the volume has been growing from strength to strength, especially the pickup much in 2020. At the beginning of 2020, we know what's the event. The event is the pandemic. So even there's more uncertain in the market, you could see that the volume pickup. Why? There's a reason. People use it to hedge, investors use it to hedge, and traders find that there's a reason to trade because the volatility of all these indices have picked up tremendously. Okay, so this is another demonstration of the record volume since the beginning of the year. You could see that especially in May onwards, the March, was it March? Yeah, March, April, May, the volume have picked up tremendously. Now, the other thing about when we trade the futures index, one thing that whether you see that the index is popular is also the open interest. Open interest, what do you mean by open interest? It means that those positions that they have opened their position and carries overnight, whether it's long or short, is being represented open interest. So once again, you can see that in 2020 onwards, the open interest has been picking up. It means that the investors or traders that deal in this micro E-mini futures, they are serious about it, that they don't just trade intraday, but they also have a position in all these contracts. Okay, so this is something talking about our region, Asia Pacific, and I believe that I've been doing some work with CME Group for coming to a year by now. Okay, so yeah, so if I'm not wrong, I believe that only Asia Pacific over the last 1 year, it has been growing. Okay, it means that the Asia investor, we have this community, there's a growing interest in trading the micro E-mini index futures. Okay, so something which I'm also quite glad that perhaps if there's next time when the borders are open up, we can spend 1 day over there. I hope to share some strategies for option trading. These are wonderful products as well. There's premium that you pay if you have a direction. I enjoy trading options, not all the time, but at a given time, sometimes option I have its attributes. So the good thing is that because of the successful launch of the micro E-mini index futures over the last 1 year or more, CME Group have also decided to launch the options. The starting date will be the 31st of August. Okay, so option is nothing complicated. So basically, in short, based on my personal experience, is that options, when you trade the different option and the strategies, something that you have to know is that you still have to derive a view from the underlying. When I say derive a view from the underlying, it means that it's nothing to do with strategies. It's something to do about yourself. What is your view right now moving forward? The next few days, the next few months, how confident are you? Then you select the existing strategies that's available for options. So there's a lot of option strategies around. So it's nothing to do with strategies, but there's a lot of very much to do with our own personal view. What do I think about the market now and moving forward? Okay, so I've finished the introduction for CME Group on their behalf. Now I'm just going to move on to the topic tonight. Right, market psychology, how winners and losers think and act. Now, the first part I'm going to talk about 80-20 principle. So today, when the market is getting more sophisticated, in fact, I believe that the market is not just in trading, but everywhere. It became 90-10 rules. Now, what do I mean by 80-10 and 90-10 rules? But let me start off with 80-20 rules principle first. Now, like what I say, it's not just only applied to investment and trading, it also apply to other industry as well, okay? But I just want to, the limited time that we have, I just want to focus on the 80-20 for trading and investment. Now, most of us will know that investment and trading are mostly zero-sum gain, means that some will lose, but the other will make from the losers, okay? Now, in trading in the old-fashioned ways, now that was me about 20 years ago, I still looks pretty much the same. Okay, now, yeah, my children say that I still looks pretty much the same. Now, in those days when the market is not that efficient, honestly, it's quite easy to make money. Even in the business world, whenever the market is not that efficient, if you are brokers and dealers, somehow outside trading, okay? When the market is not efficient, there's a pocket of avenue that you can make some money through your business. So same thing for trading as well. When I was on trading floor, those days are not the computer matching system. I could see that there's a lot of individual trader making a lot of good money. From the 80%, that means 80% may lose money, but when they lost the money have to go somewhere. So they want that think correctly, that act fast. These are the 20% making the 80% of the losses. Now, moving forward, like what I say, it's not just in trading or investment, in other industry as well. I believe that this have shifted. Now, 10% of the community are making 90% of the community from their losses. Now, why is it so? Because of the market is getting the speed of connectivity and information is so seamless right now. So in order to make our time productive and to really make profit from the market, you have to be full of knowledge. It's not just knowledge, but you have to understand what you know and then need to apply it correctly. So, but I believe that you can be the 10% making 90% of the traders or investor community who are lazy, who don't examine about themselves, and they trade loosely. Because later we discuss about the few different character, you will know what I mean. Now, when I deliver this topic, I'm not trying to shame the 90% of the investor or traders community. I'm not trying to do that. I'm trying to in fact do a promotion here is that no, my promotion is not market promotion. My promotion is our mentor promotion. Now, I want you to shift your thinking to be the top 10%. That's my intent. That's what education is all about. Okay, be the top 10%. You've got to think correctly and act correctly, and to make the losses from the 90% of the community who choose not to think or entertain the thought about education and choose not to practice because it's too much hard work for them. So with this 1 hour presentation, I hope that you open an avenue, the way you think, the way you act. But of course, after that, you still have to put in the hard work to practice it yourself. Now, 90% of the market participants are loser. So let's examine the loser, this community, which is a large community of them, where there are 90% of them. Now, I'm going to describe about 3 characters, John, Benz, and Catherine. Now, so these represents the 90% of the trading community or investing community, where most of them, given time, they may lose money. Okay, so I will take on one by one. You may find that maybe yourself there's some similarity, or maybe you have observed some of your traders friends or investor friends, how they invest and trade. It is wrong, that you could reflect upon how they do it. So I hope that it will be a blessing for you, that you reflect upon what they think and act, then you choose not to follow their action. So that's my whole intent about tonight's program. Now, so at the end of this study of these 3 characters, that they all have something in common. Now, I want you to, later I'm going to take a few seconds just to freeze after I explain to you the 3 characteristics of these people. I want you to come up with an answer yourself. What are their common fault in them? Okay, now let me just, what do they have? That they all have something in common at the end of, after they make losses, they all have something in common. I want you to identify what is it, okay? Now let's talk about the 3 main characteristics: the greedy, the prideful, and the ignorance. Let's talk about the greedy first. Now, his name is John. Okay, so John is someone like, I think between Malaysia and Singapore, we are quite unique in the world whereby we still function with, we still have this avenue where for stock trading, we could do contra. Contra means that we don't put up money up front, we can get in and get out within a given time. So I think it's very unique just between Singapore and Malaysia. Now, so John is someone that loves to trade contra because he has no intent to pay up. And he's also a punter. Yeah, he enjoys the market, but he's also a punter as well. So he's greedy. So his mind is always that I must make more. So that's John. Okay. Now again, this demonstration is not to shame any one of you or shame this community, but it's more like a reflective. I hope that you can take this as an inflection upon yourself or the community at large. Then we choose not to follow their footsteps. So this is the first step to understand behavioral science, okay, market psychology. Now this is John. Remember, he's greedy. Now this is how it works. And John would think that this stock is in play because its uptrend is hot right now. Then after that, he's very patient, he's skillful, he wait for dip, he'll buy 10. Then he sold 10. So that's first round, he took profit. Now in the second round, he knows that buy high, sell higher concept. Although the market is higher, he will still entertain the thoughts of maybe get into the second trade. But you notice that when he get into the second trade, his heart have grown big. He, instead of trading 10, he wanted to trade 30. Now he bought 30 and he sold 30 for a profit. Now again, the market did a retracement. He buy 50 right now. Now notice that his volume increased. His heart grow big. There's definitely a very consistent greediness in him. So he sold 50. So for third round, he makes money. So as the market retrace, he bought. Now notice that his volume increased. Now he buy 100 and he buy another 100. So in this fourth tranche, he bought total 200. As the market push up, he sold all 200. And his balance in the account have grown from contra or from all this punting. So both John and his brokers, they are both all very happy. And John has struck a deal with the broker that can you give me more limits? So next time, instead of just giving me 50,000, can you give me $500,000? Because each time I'm going to buy $500,000 worth, and all of us will be happy. I'm happy, and you are happy also because you make the commission. Okay. Now then he bought 300. He bought 300 more. Okay. So total 600. And as the market go further down, John buy now 300. So now he has a new position that total he is holding 900 lots in this particular contract or stocks. As the market recover, he sold partial. So you notice that John is quite skillful. And now as he sold 300, he sold partial. How many lots have John left? He has left another 600 lots, but he's still stuck. Now as the market continue to dip, he buy another 400, making a total position right now, open position, that he is holding 1,000 lots. Okay, and now the brokers are really stressed, and John is also finding himself a bit stressed as well, or in fact very stressed. But market did not recover like the past. And then he want to buy some more, and the broker said, no, there's no more limit. I'm sorry, you have purchased 1 million shares in the market. There's no more limit for you. So as the market continued to dip, there's an overloss situation. Whatever you make in the past, it was stored in an account, but all this have been wiped out. And as he continued to hold on, usually I notice for John, why do I talk about John and how come do I know about them? Because I deal a lot of with John, people like John last time. I was in the service industry before I came out being a full-time investor and traders. So I know a lot about them because I deal with many of this John. So as the market continued to, this particular stock that John has invested continue to have, in fact, because of the oil price, this company went default. So he is into very serious trouble. Not just him, but both the brokers and himself went broke. Okay, so that's John. Now notice that he is he's a punter. He's more like a gambler. So please don't take this market as a gambling ground, because this market is not a gambling ground. If you study the market dearly and you understand the market, always have this idea that before you enter, always ask yourself, what is the probability that likely the market will go up. So always have this thoughts in your mind. Then I believe that you're going to be a much successful investor and traders to come. Now let's study about this very prideful investor and trader. Now, who is this very prideful investor and traders? Now, let me just give you his profile. His name is Benz. Now, Benz is a very confident man, and he is likely a businessman, a very successful businessman, or very successful in his profession. He's the cream of the industry. If he's a lawyer, he's a top lawyer around the country. If he's a doctor, maybe he's a top doctor around the country. If he's a businessman, likely he's a very successful businessman. So throughout his life, Benz is always growing from glory to glory. There's always successes. Maybe in school, he's a scholar. At work, he's given an opportunity to climb up the corporate ladder very fast. So his life is always about success. But I can tell you that your success model in business, it doesn't really quite apply to trading unless you think it correctly. So Benz is a very prideful person. Like for example, last time I deal with a lot of Benz before. So whenever I say that, hey, Benz, do you think that we should consider some risk management strategies by having stop losses? Now Benz will kind of reprimand me, say, Kong Hao, don't you know me that I will never cut loss? Now this became a big problem. Now let's look at Benz, how he deal with it, with his investment and trading. Now he's a smart man, he has his thought, but his only problem is that he is very prideful, okay, a very prideful man. Now, so this is Benz. Now he's a very smart man, so he understands about market direction, he checked with his bankers, he read into the economists, so he understands about market trend. He's a businessman. Now, so he knows that when market has turned up, so he's patient as well, he'll buy on dip. So he bought A and he sold A. So first tranche, he took profit. So again, I can buy high, sell higher. So Benz think like that as well. So the uptrend is confirmed, I'll buy right now. So as he bought, the market goes higher, he sold off B. So for second tranche, he took profit as well. Now on the third tranche, when the market did a retracement, he bought. Then after that, when market go off, he took profit. So he's a happy man. So it's the fourth tranche, he buy again. So again, now Benz is someone that served by bankers, and I notice about all these clients, the prideful investors or traders, they love to average, but they're not like John. They don't get into something that they're not that greedy. So their position are quite light in a way because they always prepare to average down if possible. Now, so on the fourth tranche, John buy into D and buy into D on the second time. So as the market recover, he took all. So he took all his profit. Now Benz have no position at all. Okay, he's still a prideful man. So he continued his trading activities. He buy into E now. Okay, into E trade. Was it the fifth tranche? Yeah, it's fifth tranche. So on the fifth tranche, he buy into the second round. He bought into the third round. No worries because his pocket is really deep. Okay, so he asked his banker, no worries, my pocket are very deep. So Benz understand about averaging. Okay. Now, as the market recover, just like John, he also knows about how to maneuver his trade. So he sold partial. He took out his profit on the third tranche, on the third round that he bought on this fifth tranche. So, but he's still holding the first round and second round on this fifth tranche, on the E tranche. So as the market comes down, he reinstate again. Now they continue to reinstate, but as the market continue to sink, he finally feeling a little bit stressed. So when he want to add on some more, okay, then the banker will say that, sorry, sir, there's no more ammo for you to add on. Although you still have some margin left, but based on our compliance, you are not supposed to add on anymore. Okay, so and Benz wanted to add on, and he's very angry with his banker. Then what happened is that the clients got so angry, say, I just don't care, just buy some more for me. But the banker insisted, say, sir, I'm so sorry, there's no more cash to add on. Then when the client say, so what's my unrealized loss? The banker say, it's this amount, and the client got a shock. Okay, but he's still a wealthy man. It's just that for this portfolio, he lost huge sum. Okay. Now at the end of it, where I noticed that after every crisis, 1 or 2 years later, this not too responsible, prideful, rich client will usually pass the blame to his bankers or his broker. Okay, so I think the brokers, when they heard this, could associate to this story. Okay, now let's talk about the next one. Her name is Catherine. Now Catherine is just now I say that we're going to study about this large community, about 90% of them. So we study about John, he's greedy. We study about Benz, he's a very prideful man. And who is Catherine? Now, Catherine, in fact, represents, I believe, about 90% of that 90%. That means it's a large community. Now, Catherine's ignorance is not because she's lazy, it's because she has no time. Now, it's a large community of the 90%. Why I say so? Because Catherine, let me just give you her profile. Now, she's always in doubt. That means she's always unsure about things. Now, Catherine is someone like maybe who's a manager, maybe it's an executive, maybe it's even an MD. Quite all right, doing quite well in life, but she has to work very hard. Finish work at 6, supposed to be, but usually she will work extra hours because she's so responsible. She work until 8 o'clock. So she's a very hard worker. And maybe she's like me. This year she's 48 years old, and she is now a senior manager. And she knows that for her to climb the corporate ladder at age of 48 to be maybe a MD is beyond reach. Okay, there's no way. And she needs to start to plan for her retirement. She got quite good saving, so she always think about what should I do with my money. And she always have this thought that in case the company give me a golden handshake, because the environment is quite bad, I may want to be a full-time trader, but I better start to do it now. Okay, so or when I retire, I want to invest now. So when I retire, I have this sum of money. So Catherine represent a large community. Now the problem with Catherine is that she has no time. She worked very hard. Now I would advise this community is that at the end she always come to me and say that I have no time for my investment. Can someone help me? No, I would recommend Catherine that, hey Catherine, look at it. Look at this here is that you spend so much time and effort just to save up the 10,000 or 20,000 or even 50,000 or 100,000, but you spend a lot of time just to save that money. So when it comes to investment or trading, can you also put in a lot of serious effort to manage this account as well? Okay, so this is Catherine. It's not completely ignorance. It's not her fault. But rather she really don't have the time to do that, to go into in-depth study. But my advice to you is that, no, Catherine, if you're Catherine, I say that I got to speak to you right now is that you also, because all these are hard-earned money that you're saved. So when you're going to invest this money or trade this money, so please also spend as much effort in this trading plan, investment plan, compared to what you have done for your company. It is your money. Okay. Now, so this Catherine. Now, so what happened here is that for Catherine is that usually they will start off just wanting to have a quick profit, but after that they became long-term investor. No, this is Catherine. Okay. Now, usually Catherine do not have an idea of her own. She'll always hear about what the bankers say, the remiser says, what this economy says. But I would encourage you that really you have to derive a view, an opinion from your own. It's a conviction. Okay. So what your broker say, what your friends say, or what your neighbors say, you can take it as an opinion. Then after that, you need to digest them. Then after that, you form your own opinion. Okay, that's a start for you, Catherine, if you are Catherine. Now, Catherine always look at this. Price dropped a lot already. My friends say it is a good time to buy now. I will buy now. So she bought into this contract. Then the market sink. You say, oops, it is okay. I'll buy some more to average it because my broker says so. See, I'm right. So she felt a bit stressed. So when the market broke new low, she say, just help me to cut loss. So scary, cut it out. Then as the market trades sideways and move up, usually Catherine will call her broker and say that, hey, Mr. Wong, do you believe that the market have eyes to look at my position? Every time I cut loss, it was the low. Every time I buy is around the high. No, I can tell that no, market don't watch your position. in these days, if market, because they know your stop loss and they trigger a stop loss, they are considered illegal. Okay, so please report to your regulators if you sense that. Okay, no, market don't behave like that, but it is exactly the mass market behavior. So usually this large pool of traders or investor, when they cut loss, usually is around the low. Okay, so then when it start to, after she cut loss, the market move up, she will sign and say that, please don't tell me I cut at the low again. See, I told you market is coming down. I don't believe this, but never mind. I will wait for it to come down. I'll buy back again. So Catherine is very angry, but market do not wait for her. It continued to move up. Then she said that, I think I'm right all this while. I will better buy now. If not, I'm going to miss it again. So she bought. Okay, she bought at the high, and the market trade sideways and dip a little bit. Then she called her broker. She looked into the stock, that particular stock. She realized that, hey, this stock is not bad. And she will call the broker, say, hey, do you think that this stock, the PE is good, the book value is good, it's a good stock, am I right, pay dividend? So she just wanted information from her broker that it is a good stock for her to hold. And she became a value investor. We shall have observed that most of the value investors, their portfolio are still in red. Why? Because they only identify as a value investing, that this stock should hold after they have made 30% losses. Okay, so this is not a right way to do and deal with your investment and trading. And of course, the story continued to sing. Then she said that she cannot believe this. Okay, so now what do you think? We have studied into these three main characteristics. I believe it kind of will speak to you. Either you find it's relevant to yourself, or you've been through that, or maybe someone, your neighbors or colleagues are behaving like that. Now, at the end of it, after they cut loss or they hold on or sit on their losses, they all have something in common at the end or at the point when they cut loss. Now, what is it? Can you identify what is it at the end of it, after they cut loss or before they cut loss, but in a very dire straight situation because the market is not in their favor? So what do they have? Okay, it's the word called fear. Now, all of them had the fear because first of all, they behave or they think in the wrong way. Okay, so now I've just finished my introduction about how this whole topic about market psychology. So we spent a bit of time to study into the loser, which I felt is so important for us to first study them first. Because once we study them, if you are new in trading or new to investment, I hope that you will not be like them for a start. But if you are like them, so it's a good time that we can inflect upon ourselves to reflect and inflect that we make changes. Okay, now let's study into the winners right now. Now the winners is only about 10% of the market participant. Now let's read into the winners. Let's study about they know the key difference between investing and trading. So earlier we discussed about the loser, but now we're going to study into the winners. Now, the first step is that the winners make a clear distinction that they have two portfolio. Okay, the first portfolio is that for investment, and the second portfolio is for trading. That's how the investment think, and they know and they separate their portfolio. Okay, now let's talk about the investment part first. Now, as an investor, the winners, they have a very clear mandate. They don't mix them together. Now, they know that when there's an opportunity, they have to identify, is it for investment or is it for trading? Now, whenever there's an opportunity there, he will say that this is for investment. Now, how will he know? Is that usually, or when he search for an investment opportunity, there's two things that he knows or he's looking out for. The first thing is that he need to find value. And he also know that after I make this purchase, because I see that there's an underlying value, and now it's cheap because people, the general market, the mass market don't see the opportunity, but I see, because the general mass market do not see the opportunity. Therefore, this particular contract or stock is around the low, but I see something that people don't really see, but I buy now. But I know that I need to give time. Given time, it should appreciate. So these winners, they understand investment is about to find value and to give time. But how about his portfolio in trading? Now, his portfolio in trading is very different. He's not too interested about the major uptrend. That's for investment. But for the same traders, what should I call him? I think I'll call him Nicholas. Okay. Now, Nicholas is a very wealthy investor and also wealthy trader. He separates both accounts. So when he trades, he's only interested in this. Is there volatility? Okay. If there's volatility and also that contract that he is trading, there's liquidity that qualified that this contract is suitable to trade. So he enjoys trading. Maybe Nicholas trade every day or once a week or maybe once every 2 weeks. So that's called trading. Okay. But Nicholas, in the same time, he also has his investment portfolio and he separate them very clearly. Okay, so that's a thought about the successful investor. Now, next is that let's try to understand about what investing definition is to the winners. Now, they understand, just now we discussed about it, is that whenever they invest or before they invest or at a point in time when they're about to invest, they have this notion and they have this mandate that they know that I'm buying into a perceived value assets. Given time, it should appreciate, and they know it very well. Okay, I'm buying into something that's cheap, but people do not see it, but I see something in that. Given time, it should appreciate. Now, let me just give you an example here is that about 5 years ago, I wrote a blog, I make a presentation in Hong Kong as well, in Malaysia and Singapore about it is time to buy the precious metal, the gold and silver. Yeah, really in Hong Kong, Malaysia, and Singapore in different environment. I still remember very clearly I was in Hong Kong. In this environment, I was presenting to a class of fund managers. So I was delivering some programs to them. So at the end of my presentation, it was a good presentation, but the fund managers, the younger one, generally most of them told me that no, it didn't sit in very well with them about my view about buying the precious metal because the main reason why they don't subscribe to my idea to invest in precious metal back then, it was because the precious metal do not pay dividend. So I told them that, well, as a fund manager, sometimes you also need to strike a balance. Yes, you can have maybe 70% of your portfolio could be mostly capital growth, potential capital growth, and also income stocks. But maybe about 10, 20, or 30% should also consider assets like precious metal and whatever, okay? Where it don't give you the income, but it give you the potential capital growth, okay? So what and how did the gold perform after October 2015, okay? Now notice that I waited for 3 years. Of course, now when you look back, it seems that I have a very glamorous position, okay? But I can tell you that the wait, it was long. Like what I say that, again, how I define, and I hope that if you position yourself to be an investor, you also must have a strong mandate. You know how to define very clearly. Investment is about buying into a perceived value. Given time, it should appreciate. I say should, I didn't say use the word will, okay? So I still remember the past few weekends, my dad, when I visit him, he kept on singing praise. He said, wow, your precious metal is doing so well. I said, Dad, do you know that I hold it for 3 years? He remembered, okay? Now, I hold it for 3 years. After that, now look at this. For 3 years, it hardly moved. It's only the last 1.5 years, finally, the precious metal start to pump up, okay? So that's the winner's thoughts about investing. They are very clear. They have a full mandate and they know what investment is all about. Now let's go to trading. Okay. Now this will be a bit tricky because I tried this in many classes, including the professional classes as well. Okay. Now earlier I have given you the answer how to define investment. Okay. So most of us will have our own thoughts about how to define investment. Okay. We could define very clearly in the area of investment is about buying something that is good and hold long term. Over time, you should appreciate. Now I want you to take about a few seconds to think about, if I'm going to ask you this question right now, I'm going to give you a few seconds to think about, to define what is trading. Now I'm asking you a question right now. Can you define what is trading? Just one line, okay? No need anything complicated. One line definition. Can you define what is trading? Okay, can you do it now? I'm going to give you 10 seconds to think about. Okay, thumbs up. It's less than 10 seconds. Now, I went to different places, different country. I always, if I have an opportunity to share about trading strategies, I'll always ask them this question, including the professionals. Can you define what is trading? And these are the few things they will tell me. It is to buy low and sell high, or vice versa. It is maybe to make some quick profit, or maybe it is to trade and know how to cut loss, or maybe it is how to define trading is a high frequency transaction, so on and so forth. Okay. Now, my question to all of us here is that if I'm going to ask you to define very specifically what is trading, but are all these the answer of trading to define? The answer is no. Now, if I'm going to look out the dictionary, it will say that trading is a transaction between a buyer and seller. It sounds right, but is it a true reflection of to represent what exactly trading is? No. Okay. Now I'm going to share with you what trading really means to me, and I'm going to define it very clearly to you by this example. Okay. Now, in order to understand and define trading, what is through this illustration. Now, this illustration is not possible, but yet I make it a bit louder so that we will have the wow factor. So once we have a wow, it will trigger something in our mind. You know, we'll remember this. Okay. Now, let's say, for example, if you start with 1 cent and you have, say, for example, the ability to make one false return every single transaction or every single day, means that 1 cent, if you make 100% of one full return, is 2 cents. So 2 cents, then third day, if I make another one full, is 4 cents. Now, the next question I'm going to ask you on the day 31st, what do you think the number will be? Okay, very quickly, what do you think? Okay, now I'm going to share with you the answer. The next few days, on the day 31 or transaction 31, it is 10 million, 10.7 million. Now, again, I'm not suggesting that anyone on earth could do that. I can't do that. Definitely Warren Buffett cannot do that. But I just want to give you, through this illustration, I'm going to bring out a point about how to help you to define what is trading. Like, for example, I told you that I even went to those professional environment to ask them, can you define what is trading? And in fact, all of them, they cannot give me a reply. So they can't give me a reply at all. So then, of course, I challenge and I say that I told them that before you start trading, how could you not able to define what is trading? It's very shameful. I mean, we can't do that. I mean, if you're serious enough, we have to define what trading is then before we get started. Okay, so what trading means to me is that through that illustration, you know about this trader got a proficiency of being consistent, that he is very consistent to make 100% return per trade, which is not realistic. Okay, but how do I define trading is this? It is to achieve the consistency in my performances. Performances, it represents profit and losses. If my performances for trading, my performances is always about, that means per transaction, because it's a shorter term trade, my view could be an intraday, could be a few days, could be a few weeks, or maybe up to 3 months. That's called trading. That means each trade, my objective is just to make about 1 or 2% of my trading fund. Say, for example, my trading fund is $10,000. 1% is $100. That means each trade, my focus is that I just want to make $100. So similarly, if I encounter wrong judgment, my losses should be also about 1%. Now, notice that how I define trading is that it is to achieve the consistency. That means I try to be as consistent as I can in my performance. That means I try to make more of the winning, less of the losses. More of the winning, less of the losses. Each time when I try to clock about 1%, 2% of my trading fund. And each time I lost, hopefully as a lesser losses, that also I try to have a very measured risk management. Each time I lost about 1 to 2% of my trading fund. And over time, it's being accumulated and it makes perfect sense. Okay, so this is the definition about how I know about trading. It is not to write through the whole few years trend. No, maybe the few weeks trend, later I'm going to show you how it works. Now, all of us should have a definition how to define what is trading. I hope that will give you some ideas. And really, I hope that after tonight, sleep over it, think about it. But I hope that you can also craft out a definition about what is trading to you, how you define trading. Okay, but of course you can use mine because there's no patent about to define what is trading. Okay. So of course we could see that there's also a power of compounding effect that bring greatness in this. Okay, so however, if you still behave like, if you know about this definition, but mentally your personality, if you still behave like John, Benz, or more of Catherine, so because of this fear, it will hinder our growth. Even you have great plan, so therefore you have to clear your own system first, the mindset that we have. Okay, then once you have this clear definition, I hope that you are able to perform well as a trader. Now, I spent quite a bit of time being a trader because I felt that there's a lot of misconception about being a trader. Now, next thing is that for investing, they have a plan and they know how to manage it. Okay. Now, the investment is that the what kind of profit are you looking at in percentage? Now, I always calculate my winnings and losses in percentage. In what kind of percentage, if you are an investor, what are you talking about? How many percent would you like to make? Like for example, my goal, I invested about 5 years back. My intent is to make a few folds return, but I know given time, I already told you that investment is to find value given time. And my objective is to continue to hold it. I believe in time to come, I will make a few folds return. Okay, now maybe I make about coming to one fold. Okay, and one fold means that coming to 100% return. But I believe that I'm still going to sit on gold position or my precious metal position because I believe in time to come, I may make a few fall. Now you notice that for investment, for every investment, it is slow in making. We need time, but it is possible to amass more. Okay, but how about trading? How should we plan and know how to manage our trading? Is that what's the percentage? Now, earlier I already discussed about in trading, we have to be realistic with our profit and loss in percentage. Now, maybe you have not asked yourself this question, how much should I make in this trade? But today, I hope that after this presentation, you can reflect upon your own trading plan. How much should you make per trade? Now, I can tell very realistically is that per trade, my target is just to make about 0.5%, 0.5%, or maybe 1% of my whole trading fund. Let's say my whole trading fund is $10,000, 10,000 US dollars. If I'm going to make 0.5%, it means that this trade, I just want to see a 50 US dollars profit or 50 US dollars losses. I may adjust between about 0.5 to 2% depending on the short-term trend. Okay? Now you notice that for trading is this, for every trade, it is fast in the making. It can be within minutes, it can be within the same day if I talk about intraday, it can within the next few days if I take on a position, okay? Or it can be within the next few weeks if I take on a longer term position, but still a short-term trade. But you notice that every profit and loss are small. Okay, so there's a clear difference between how we should plan our investment and how we should plan our trades. Okay, just some illustration here is that with $10,000, say for example, each trade you plan to make 2% per trade out of this 10 trades. Now you notice that if you start with $10,000, your first trade you make 2%, your account became $10,200. Now the second trade it became 10,000. You still make that 2% off the 10,200 because your new beginning is 10,200 is no longer at 10,000. Now you notice that your new balance became 10,404. Now this extra $4 is precious because it's the mathematics, it's the compounding factor of getting it right. Now as you keep on doing this, if you understand the principle, on the 12th trade, it may not mean a lot to you, but it definitely means a lot to me. Is 12,682 is about 26% from a 12 trade. Now you can do this where exactly I'm doing this right now is that every month I just on my trading fund I try to achieve about 2% per month. Now this is 12 months later. I just change it from per trade to per month. Okay, you can do that. Don't be too rushed about yourself if you plan to trade successfully. Just take it easy. Okay? Take it light. Choose the right contract. Then just try. Get your finger wet. If the making is too little, 50 or 100 US, don't despise that small making, because small, if you know how to accumulate and compound it, there's a greatness in its. Okay, you may have heard of this term, less is more. Okay, now this is another illustration. If you keep on keeping on, I'm 48 years this year. For the next 30 years, I think I will be definitely still investing and still trading. For the next 30 years, I'm still a young man. So yeah, and my wife, my children know that I will likely die in this career. Okay, so yeah. Now, just take it as you in this motion, 2% per month, and every year you're just going to clock this performance. This is called absolute return. Okay, it's not relative return, absolute return. Now let's study about this performance here. Of course, all these are hypothetical to me, but I hope to achieve that. Okay, but over the next 30 years, from $10,000 on a non-withdrawal basis, you should be targeting at least about 12.4 million US dollars or Sing dollars or ringgit. Okay, the time is very short, it's very limited that we have. I just want to move on to quickly about the trading strategy, because we still have we still need to allocate some time for Q&A. Now, what about the market outlook right now? Okay, now this is Dow Jones Index monthly chart. I captured this on the 7th of August 2020. Now, if you're an investor, because a lot of friends and associates start to ask me, how the US market is so hot right now, do you think we can invest in the US market right now? Then I told them, it's very standard answer, standard model answer to them. I said that if you're going to invest, my advice is no, but if you're going to trade, my advice is yes. Okay, now notice my question here is that, are you going to start our investment here? Now you look back in the history since 1985, or even as many years as you could, the US market right now is at its highest point. You have to differentiate between investment and trading. Investment is about buying value. Something that is perceived value is cheap right now, therefore you buy. Now I'm just going to take it very generically about Dow Jones Index. Are you going to start your investment here? Now you reference to the left. Is there any value, cheap value right now, or perceived value to buy into US market? Now my answer is not really. Okay, so you also have understand something about investment, about risk management is this. Investment is not just to focus on the potential upside. Okay, I know a lot of people just focus on one track, but investment, we also have to take care of any potential downside risk. We have to plan that for investment. So in my opinion, if I'm going to start investing, now my keyword is if I'm going to start investing today, means that I've never invested in US market, but if I'm going to start investing in US market today, I felt if the market, if there's any trigger, the downside risk, the potential is great on the downside, which I'm not prepared to take this risk, but I do not mind to trade the US market. Okay, now this just to give you another a view. It's the same market, but I just switched the chart to a log chart, so it gives us a different perspective. Now you could see that every peak and trough, every peak and crash in .com, 2008 crisis, and COVID-19, the little crash that we experienced in Feb and March, it was really nothing compared to 2008 and .com if you use this log chart. Okay, so you have time, go and explore what is log chart. Okay, so I'm just very quickly going to talk about how should we strategize it. Okay, now I think at this point we have a very clear idea. What is market psychology about? I have this. I always like to say this: every instrument are designed for a specific purpose. Now, if I were to be an investor, when I see there is a potential value, I will buy into assets. So stocks, properties, all these are assets. Companies are assets, okay? But provided I see value, so I buy into assets. But when I see that the market is a bit uncertain, but it's very volatile, okay? And especially when the market is volatile and packed with liquidity, I will definitely engage derivative for my activities, okay? So that's the key difference. Let's study about this S&P day chart right now. Now, on the left, you could see that since 2019, the S&P behavior. And what I did is that I used my Excel file with this chart. I use a tabular mode. I convert it to numbers. and the summation or the high, summation or the low, I divided by about 255 days in 2019. And I begin to realize that in 2019, the whole day, averagely, every day is about 33 points for S&P. But this year is something extraordinary happened. In 2020, of course, the year have not ended yet, but I took from the data from beginning of 2020 until right now. Okay, so same thing as summation all the high, summation all the low, divided by the number of days, about 100 plus days, I get an average daily range of 84 points. Okay, 84 points was the average daily range for this year. Compared to last year, the average daily range was 33 points. Now, what does it mean by that? Now, in this chart, I say that trading opportunity increases with volatility when volatility increases. It means that this year onwards, that every day we're seeing about 84 points. It's about near about 3 times the range compared to last year. When the range is higher, it means that it's more volatile compared to last year. It also means that if I were to be an intraday trader, that this is what it means to me. Now, as an intraday trader, we capture a part of the range. Say, for example, last year was 33-point range. Usually, as an intraday trader, I will try to capture about 30% of the given range. It means that with 33 points, every time I trade last year for S&P, I try to target for about 9 points profit. Okay, because 30% of 33 is about 9 points. But this year, there's a lot of opportunity here is that when I trade intraday for S&P this year, because everyday daily range is about 84 points. 30% of 84 points, what does it mean to you? Okay, it means about coming close to about 25 points. That means every time my target is about at least about 20 plus points just to trade intraday for the S&P. That's what it means to me. Okay, a very quick one about, of course, when you trade a short term, we look at 180 minutes chart, 60 minutes chart, or even 5 minutes chart. But in this demonstration, I'm giving you this NASDAQ index, 180 minutes chart. Now, I want you to identify those hammer with higher weighting. So later, I'm going to give you a link where you can take another 1 hour to study through what I've presented last year about how to identify those hammer with good weighting that you can act on it. Okay, so these are the few. These are the hammer with good weighting. And you could look at, this was just about a 1 month period that it happened 3 times during this 1 month. And each holding period is about 10 days, 6 days to about 10 plus days. So this is what I mean. And just to demonstrate that, just to remind you that the current market is so conducive that starting last year, they have all these micro E-mini contracts. Whenever I buy into 1 Dow Jones, micro E-mini contract is as if I'm buying a 30 blue chip stocks worth $13,500 US. It's just amazing. So these are just some contract specs that you can reference on. I hope that I can spend more time with you, but you can just take a snapshot, okay, to understand, or call your broker to understand about the contract specification of micro E-mini. Okay, so this is the QR code where you can study about how to identify market reversal. So it is free. So if you have time this weekend is near, please take about 1 hour to study them. I'm sure that it will bless you how to identify those potential reversal, and especially those hammer that carries higher weighting. Now, so before I move on to Q&A, if you would like to be updated with more of my content and delivery in the future, you can subscribe through this QR code. So I've made some final amendment in this the last few hours before the event tonight. So I will send the program handout to you as well in this QR code. Okay. So this is how we can get connected and continue to learn. So go to the e-learning tab. I will continue to upload those new programs there as well. So also, this is important. So do like or follow my Facebook page. I will make my daily posts on market insights and those potential market opportunities there. So this is my YouTube and IG account. So information shared there are all free. And lastly, I will always welcome your questions, even 1 year later. You just tell me where we have met and where you have heard me. You can share with me about what you see about the market, and especially I'll be very excited about what's your plan and what your strategies. I would love to exchange some ideas with you, but please don't email me and ask me about what stock should I buy, okay? Because these you can call your broker. It's not my passion. My passion have moved on. My passion is to really to help the environment and also to share some exciting to shape the mindset of investor and traders. Okay, so with that, do join me for the next session. I'm going to continue to talk about the market psychology. The part 2, I think that will be on the 27th of August this month. So, but before that, I really encourage you to also have, if you have not have a platform with Kenanga, I would really encourage you to have a platform, because I checked with Nicholas. It is free to have an account. So how useful it is to have an account, because once you have an account, before you come for the 27th August class, there'll be certain contract I'll be using. They're able to see all these codes. Maybe you can explore their charts to see whether their charts are really good, their platform are really good to execute a trade. So get yourself prepared for the 27th August, so at least you're not lost. But I'm glad that today you attend the this part of it. So as I move on to the next part, how to plan for your trade, you'll be much clearer to you. Okay, so with that, I just want to thank you so much for staying through the last 1 hour plus. Okay, so I'm blessed to have this opportunity to spend this time with you. So please apply what you have learned. So stay profitable and safe all the time.
All right. Thank you, Kan Hao. And we apologize that we were unable to answer some of the questions posted here. However, should you have any further queries, please feel free to drop us an email at bcrm@kenanga.com.my. And yes, what Kan Hao was mentioned just now, that opening futures account with Kenanga here do not have any fees. So actually, you can open a futures account when next 2 weeks for second session for Kan Hao here, you can able to log into our trading system. You can view live quote prices with live charting. So that will help you a lot. So if you have any more questions, you want to reach out to Kan Hao, you can directly email to Kan Hao. If not, you can also drop us an email at bcrm@kenanga.com.my. So thank you everyone. We appreciate you being here and hope that you enjoyed our webinar today. Please take a minute to rate our webinar, and your feedback is highly appreciated. Again, don't forget to register for our next webinar, which is on 27 August. Thanks again for joining us, and hope to see you again in our next event, right? And good night, everyone. Thank you.
Good night. Thank you. Thank you, Nicholas. Thank you.
What are you clicking?
Click KenangaFutures.com.my, Malaysia's leading derivatives broker.